Hamzah Khan is the head of DeFi at Polygon, one of the biggest players in decentralized finance and the blockchain space. In our conversation, we'll dive into Polygon's major announcement with Reddit and Robinhood. But before we get into it, Hamzah gives us a brief overview of the Polygon ecosystem.
Sometimes from the outside, it can look a little, weird, so to say. But from the inside, I think people who know where the industry is going and who are from the inside, like our team is very clear on how blockchains will become in the future, at least in our opinion. And that is very clearly that there are two ways how things are going to be. One is like people are going to have a private server, like in traditional computing, in cloud, how we used to have like two things, right? Like a private server, a public server. And a public server is, a POS chain, like Ethereum main chain is like the public server where everyone is where everyone can deploy whatever they want. And this ZK rollups, ZK EVM is a public public chain. Anyone can deploy, anyone can fork, do whatever they want. But the more interesting thing comes when these enterprises and games and like these some very big institutions want a KYC base layer KYC platform for deploying and all these things. So that is where a private server, which is a supernet or app specific chain, app specific rollups come into the picture, because if you have to onboard, the next 5 million or 10 million or 20 million users via your app, I'm not saying chain, via your app, everything is going to break. Everything, like all the chains put together, they'll break, because if Reddit brings all of their users on like day zero, everything is going to break. Same will happen with Instagram. Same will happen with anything that is like all these big social media, high throughput. Anyone who requires high throughput, like that's all going to fail. So that is how we are thinking in this, like. Because we see such high demand from these big institutions that Supernet is that project which will cater to these big enterprises and big games, because games require a lot of microtransactions coming in. Same with fintechs. Also, these big neobank fintechs like Nubank, you must have seen, which is LATAM's biggest digital bank almost now. So they have 50 million users, and if 50 million users come to Polygon POS chain or Solana, like whichever chain it is, it will break for sure. So that's how we are thinking to scale into like private server, public chains, which is POS, ZK EVM, and private is more like supernet app specific rollups or app specific chains.
Right now, Polygon maybe is categorized in two sectors: public chains and private chains. And in the public chain side, there's the proof of stake chain, and then the ZK EVM that's coming live.
It's like testnet is already live. Testnet is already live. There are like 20-25 projects already deployed and testing and all of that.
Right. I guess like mainnet is.
Mainnet. Yeah.
And then there is the private chain side called Supernets.
Yes.
Okay. And what are these private chains like? Like how are they actually built?
Yeah, so it's like how we have it's not like private chains. What I meant was private servers, like in dedicated servers. Shared server and a dedicated server. I think that is a better analogy. Like a shared server is your POS or any other chain, whereas dedicated server is like one chain where you can spin up your own validators, your own block times. You can create that. So basically, how it is created is we have a framework called Polygon Edge that allows to spin up your own chain. So think of like how Cosmos SDK allows you to build your own chain. Similar to that, but that is Cosmos and all those like different. The whole tech stack is basically different. Whereas over here, it is a EVM compatible app specific chain where you can make your own chain. And this chain is what like 3-4 projects now, about like 10-15 projects have already built it and testing it. Like Nubank is one of, I think, the biggest one. There are some very big, very, very big games that are already like, AAA games that require a dedicated chain for themselves to even start thinking about coming to the Web3, because the throughput that they require, the gas fees that they require, is just not possible on a public chain. So that is or a shared chain, public chain or shared chain. So that is why these big games are testing it. So you can build your own chain. The docs are public. Everything is public. You can today go and start creating your own like DeFi platform on that or anything. Yeah.
So what's the point of having a project or an application run on these dedicated servers?
Throughput mainly is throughput.
No, I know, but like why like have a blockchain in the first place if you're not going to be building like on a public blockchain?
That's a different question. Like I think that is mainly because blockchains allow you to have these custody of assets, which is a very important thing, and that allows the users to have custody of assets, which is a very important thing, whether it is NFTs or money, hard money, 20s, or like that is a very important thing in this to minimize trust, because in this world environment where things are getting global as much as trust is decreasing. Because of obvious macro conditions and how and just like how tech is evolving, so to say, so we have to minimize trust on certain central parties, while also decentralizing and giving access to the users of their hard assets. And otherwise, yeah, you're right. Like why not do it on a database, Oracle database or whatever. But the non-custodial aspect is very interesting, which these big companies understand, and that's why, like, Facebook. The Meta and Instagram, when they did their Instagram NFTs on Polygon, they were very clear from day zero that we want to do it on an open infrastructure, because people have to be able to, maybe tomorrow they can add a composability layer into royalties, and new monetization techniques can be created when all of those things are on one layer. Or at least have connectivity to one layer, because we did this enterprise thing in 2017. Enterprise blockchains have been there since 2017. There are many names, like you can if you've been there, you know that. So those things did not succeed mainly because it is incredibly difficult to obviously first to run your own chain. There's no doubt about that. But bringing traction onto that chain is even more difficult. And that is only possible when you have some level of composability, some level of, some level of transfer between things.
Okay, so there is composability in these private chains.
So it depends on how you design it, for sure.
But at least like users are able to custody their own assets, so they're able to like port their assets that they have on the like private Nubank chain onto their wallets, and then potentially from there to like Ethereum mainnet if they wanted to. Yes.
With bridges, or eventually, yes.
Okay.
They can do that, yes.
So that's an advantage. But then you still have kind of the trust assumption of however that chain is set up, right? Like it depends on like how each chain builds its set of validators, like how many validators they have, like how transparent they are. That's kind of up to each company how they build these chains.
Yes.
So so it's a trade-off. At least like you get to onboard these major, huge like fintechs and Web2 companies onto crypto. So it's not like fully on just like a public blockchain, but they get this throughput. You get not like a non-custodial app with maybe some kind of security assumptions that you just need to trust these companies.
Some of that, and even more than the company part is like some of these, like I can't name, but I would ideally want of course, things to be on public blockchain, but that way you cannot scale it up to, to the whole population. You would need app specific chains, app specific rollups to come up, and that is something we are working on as well. To scale up, you definitely need a decentralized layer of networking on the main chain, but on each of the chains. Hopefully we'll see something a better solution come up there.
Is there anything in the works to kind of link these different app chains that are being created?
Yes. They were working on a central hub, basically that kind of things. I cannot talk too much about that, but yes.
Okay, so it would be some sort of like bridge.
Yes.
Okay, I see I'm getting into some territory that you can't talk about. Okay, but that's interesting. Okay, and now let's get into the public side of Polygon. Proof of stake chain, and the zkEVM testnet. Those are the two main chains, right? On the public side,
POS and zkEVM. Yes.
Okay. So the proof of stake chain, that's been kind of the main chain that people have been using for Polygon for the past, what is it, like 2 years? 3 years.
Yeah.
But right now, the Polygon proof of stake chain, it's a side chain. It's not really kind of an Ethereum layer 2. With zkEVM, this would be a true like Ethereum layer 2 scaling solution, like a zk rollup chain. Is that right?
Yes. So zkEVM will be a separate layer, true layer 2. Yeah. That of course like settles everything, proofs everything on Ethereum. Yes.
Web3 is weighed down by fragmented experiences, becoming more of an obstacle for users rather than a warm invitation. Core seeks to erase these points of friction. Built by the team behind Avalanche, Core is an all-in-one command center for Web3, supporting Avalanche, Ethereum, and Bitcoin, a rich ecosystem of dApps, Bitcoin and Ethereum bridges, NFTs, subnets, and more. Download the Core browser extension to get started, and connect to the Core web to unlock additional features at core.app. Unlike its sidechain counterpart, Polygon zkEVM will be directly built on Ethereum to serve as a true layer 2. Hamzah goes on to explain the main differences between the two scaling solutions and breaks down the advantages and disadvantages of each.
Yeah, for sure. So in terms of security, which I think for DeFi is most important, which is why I'm like personally very involved in like all the zkEVM stuff, is that you don't have to trust the operators of the chain if they screw up, or the bridge or whatever it is, if they screw up or if they become malicious all of a sudden, that they steal your funds. You don't have to trust that trust assumption is gone, because how zk rollups work is like they put mathematical proof they batch all the transactions periodically, put a proof on Ethereum, and that proof can be replicated by anyone on the main chain and be like, oh, this is wrong. Firstly, it can't be wrong because the operator of the zk side chain, which generates the proof, basically either it is like multiple people generating the proofs, or it is one person generating the proof. But even one person, if says that okay, this person is this set of proofs is correct, then you have to believe that one person, and it's because all the math says that yeah, this one person, even if 99 operators are against you, worst case are against you, with that one person, if that one person says yes, okay, this is the right set of transactions because this is the math here, it works out, it proves out, and then you can move your funds back to Ethereum from the layer 2. So that way is so yeah, like trust. It is a trustless. It is a zero knowledge based EVM. So for the most important thing with ZK EVM, Polygon ZK EVM, is that it is we are the first team to completely open the code, make it public, prover, base layer EVM, all of the things, for all of the proofs to everyone, and everyone can test it, and it is live. The testnet is live, and there are about 20 projects there. So coming back to your point of whose benefit it is, in my head, of course, like there's a lot of. Still, we are so early into this. Like it just launched 1 month ago or something. But I think DeFi users, like power users, will feel more comfortable using this versus any other thing, because even optimistic rollups right now have you, as you're seeing, the big DeFi is happening either only on these two chains. I think one is Polygon POS, which has crossed now Binance chain in terms of volume, in terms of projects and everything. But on the other side, and we don't even have the big exchanges backing us, so to say. But on the other side, some of these big things have come upon Arbitrum and Optimism, because users are just in general more comfortable using those things, because they believe, and of course it is proven, but it is also believed that we can move even if the chain goes down or whatever happens on the couple of months ago. I remember one of the two, I don't want to name, maybe I'm wrong, but one of the two rollups, something happened on the relayer, on the proof side of things, which there was an attack there, or a militia attack, something. I can't recall exactly what happened, but since it was a rollup, Ethereum specific rollup, Ethereum center rollup, so you could move funds even back to Ethereum without the bridge, and just be I have this proof, and I can withdraw my funds back on Ethereum after 7 days, because it is optimistic rollup. I hope I'm not making any mistake in the technicalities there, but it was something like that. But you see, because once that happened, people realize, okay, I can do that, so I'm not too worried about bridging more funds into that thing. So that way, I in my head is 6 months down the line, when we have to grow this ZK EVM ecosystem. Q1 hopefully we will launch mainnet. And then, these power users will feel more comfortable using ZK EVM, and more interesting derivatives, more interesting on-chain, because higher throughput and all these things will happen, and on-chain. And more interesting thing is that you can do a lot of on-chain computation, because low gas is there, and it is completely provable by Ethereum security, and not by some trusted man in the middle validator or whatever. So that there are a lot of projects who have started reaching out to us, who deploy on ZK EVM even in this past 2-3 weeks, and send us we have deployed this math problem on ZK EVM, and we will be using this to prove some of our option pricing, some of our pricing formulas and stuff like that. So that kind of is in my head is also very interesting. That stuff you can do with same Ethereum security.
Okay, so the main difference is that CK rollups, optimistic rollups, true Ethereum layer 2s, get their security from the Ethereum main chain, while the Polygon proof of stake chain doesn't have that guarantee. So you believe that users, especially DeFi power users who are transacting, larger amounts of funds, will feel more comfortable using the CK EVM potentially than the Polygon proof of stake going forward.
So DeFi, yes, but there is one more interesting thing which people don't understand is DeFi. And which I've also just recently realized is that there's a lot of retail that wants access to these things, and of course we want to have those power users as well. But there'll be a good dynamic, which even I don't know how it will happen. What will happen is that I think like fintech, a lot of these fintechs that are like Robinhood, which you said, Reddit and Starbucks is practically like a bank only, like because of the card that they have and the number of accounts that they touch via their users. So those kind of things will still remain on the POS chain, just because more wallets and more things. But yeah. Power things, I definitely think zkVM is the future.
So that's a question I have with just like the fragmentation of users between these two ecosystems. Is your thought that these two chains will continue growing with their own specific set of users down the line, or is the plan for Polygon to converge in one ecosystem? Like maybe like proof of stake works for now, but is the plan for everything to go on the zkEVM chain down the line?
Again, like I cannot say too much because there are some discussions happening, but this I can say for sure, the proof of stake chain is not going anywhere. That is for sure. If things, to the second point that you said, will things migrate to zkEVM? I can't comment much on that. But one thing is for sure is that the POS chain is not going anywhere. Power user fragmentation of liquidity. Yes. As far as I see now, I don't know how the market will react when things get built. When mainnet happens in 3-4 months, I don't know how the market will react. So. But I still think there will be like two cities in this country of Polygon. It's a very weird example, but in this thing, if there are two cities and like if that has a higher premium because of security and transparency and everything. So I expect like higher quality projects, and this I'm seeing right now for sure. Like higher quality projects get attracted to that particular city, and they want to have that premium feel building there because they are the first people there.
It looks like, at least for now, for the foreseeable future, we will have these two separate, Polygon chains with their own sets of users. And then another kind of important piece for Polygon is the bridge. Which it's responsible for like the transfers of Ethereum and like from layer ones to these Polygon sidechains. And right now the Polygon bridge is the biggest out there. It's holding more than 2 billion in user funds, which is a huge responsibility, especially seeing how bridges have been the points of major attacks. Like the biggest hacks have happened on blockchain bridges. So, I'm wondering, like Polygon has, again, like just a huge responsibility on its hands, handling this kind of new technology that's been proven to be just like a major point of failure in DeFi and blockchains, and holding all these user funds. So how are you guys thinking about bridge security? Like I would imagine it's kind of the thing that makes Polygon developers the most nervous out there, at least or I would be really nervous.
No, for sure. Like it's not a easy thing, of course, to be maintaining something like that. And yeah, like you're right. So by Ethereum dApps, I've this one metric I've been noticing for like past 2 years is that if you go to dApp Radar or any other metric, you see like Polygon Bridge has been top 5 or top 6 at least most used dApps on Ethereum, because that's how you come to the Polygon chain, right? So for the past like almost 1.5-2 years, and that is definitely interesting because that clearly shows that people still keep coming and going into the chain. Most number of TVL via that chain is there, by any bridge is there, most number of users, volume, all of those things. Yes. And that's why that's why we've beefed up the security team over the past, over 5-6 months. A lot of good security people from top industry teams. Some of the names are very, very big, teams have joined. And this is not just Polygon, because we do via third party also, like Immunify and other try to decentralize the auditing process as well. But of course, it is something that the team and Mudit, who is the CSO, Mudit keeps talking about, even on Twitter, on some of these things, that it is some of these things are very important. That's why Immunify has been very helpful on some of the bugs and white hat bounties and on all of those things. And we are investing more and more in that, for sure. With everything, I think Polygon is one of the bigger bounties and bigger funding on Immunify, if I'm not wrong.
How much are you kind of devoting in bounty funds to keeping your bridge secure? Do you know?
I'll have to check, and I'm sure that number is not even I'm not sure. I can't comment on that.
Okay, no worries. But yeah, it's been a trend, I think, for DeFi in general, to just increase the amount spent on bounties, because it looks like not even audits are enough these days. You need to incentivize just a broader community to look at the code and see where the loopholes are and if auditors missed anything, because they often have done so. That makes a lot of sense. Back to CK EVM for 1 second. I wanted to ask you about CK, zero knowledge versus optimistic rollups tech, and just wanted to get kind of your thoughts on why Polygon decided to go with this technology instead of optimistic rollups, which have been, they're both super new, but at least optimistic rollups have been a bit more, battle tested, and they are kind of the most used L2s at the moment. Yeah,
for sure. Again, the bigger problem with optimistic rollup is that the UX of bridging in and bridging out, apart from other things as well, but the major from a user standpoint is that you will again have to rely, if you want to make it a very widely adopted chain network, then you would have to rely on some third party bridge, because inherently the bridge will take 7 days. That is a fundamental truth of optimistic rollups. And if you have to rely on some other, of course, there are some bridges that have not been hacked. Some of them have been hacked, but then you have to rely on some bridge network to be able to, be that fast exit, so to say. Because if users start using that, then again it will start becoming more battle tested, and then you don't know what you can't trust the whole network with 1 or 2 or even 3 third party bridges that could determine the success of your project on a very simple level. That was I can't say for Sandeep or JD or everyone, but there are a lot of technical things as well, because if you look at optimistic rollups, they inherently do. Yeah, there are more technicalities which I'll not go into in terms of the Geth implementation and those things as well on the base layer. But at that time, ZK in the industry was becoming ZK Sync had just launched testnet and or something like that. I remember was happening, and we were big admirers of ZK tech in general, for not just for scalability part, but in general, like zero knowledge proofs as a technology, not just the scalability and EVM part of things, but zero knowledge in general is a very important. It's all privacy, right? So it's very important for this technology to push the frontier into the next space. And so that's why I think that's where these two reasons were definitely one of the top ones.
So this need for optimistic rollups to wait that 7-day period to withdraw is just like a really big UX compromise that networks need to take technology-wise, and then kind of relying on third-party bridges to make that transfer faster. This episode is also brought to you by Circle, the sole issuer of USDC. USDC is always redeemable one-to-one for US dollars, has over 45 billion in circulation as of October 13th, and lets users easily access both TradFi and crypto financial services. Check out circle.com/transparency to see USDC's weekly reserve breakdowns and monthly attestation reports, and find out why USDC is a trusted stablecoin. Aave's latest deployment, V3, was launched on 6 networks and introduces new features like isolation mode, efficiency mode, and portals. Explore the protocol at aave.com, and if you're building in the ecosystem, apply for a grant through aavegrants.org. Polygon recently announced 2 major partnerships. First came Reddit launching their avatar NFTs on Polygon, which onboarded nearly 3 million users into the ecosystem. Second was Robinhood, choosing Polygon to debut its Web3 wallet. Let's hear more into the details of these partnerships from Hamzah.
Yeah, Robinhood one actually can... I'll not tell details. I'll just show you the wallet. Robinhood. We had been speaking with Robinhood for a while, and Robinhood, like 80. They showed me the numbers, like 70 to 80% of their daily users on their custodial app have once or twice traded crypto. At least once traded crypto. So that kind of user base they have, and now they were like earlier in the year they were like, we want to launch a non-custodial wallet because we believe in the technology of blockchains, and we believe that this can power a lot of new tokens and new assets that cannot be listed, and all of those logistics of listing an asset is also a lot. Whereas if you are on MetaMask or Uniswap, you can, like, it's permissionless, you can do whatever you want. So that kind of a mentality also they wanted to have it in that app, and so they recently launched their non-custodial. Can you see? Yeah. I'm poor, not that much money in there, but they can. You can access all of these assets on their, actually, like all of the assets on Polygon. So they launched a non-custodial wallet on Polygon blockchain, exclusive to Polygon blockchain, and people can access any assets that are on Polygon, even more in the near future. Right now, they have announced only like 10,000 beta users. For their beta users, but end of year, hopefully they will be opening it to everyone. So that will be very interesting for me. And the most interesting thing for projects, this is for users, but for dApp builders, like I think I have to do a better job at telling this, but these Reddit and fintechs and these Robinhood guys. Like they are, in my opinion, they are the biggest distributors of anything that we build on chain, because Robinhood has 1.5 million. This wallet that I showed has 1.5 million signups already, without marketing, without anything, because of the brand power that they have. I remember they just tweeted once and did a SOS or on their normal app, and from there, with 1 or 2 tweets, they had 1.5 million signups. So anyone that is building on Polygon DeFi, or anyone that is thinking of building in DeFi in general, should be looking into this opportunity with Robinhood or Stripe or all these things that are coming up more is that this wallet can give you access to the next 2 million, 3 million users by being on the Polygon and by doing good on the Polygon ecosystem. So these volume, these lending, borrowing, all of this will go via your app, and your app will make more fees, more volume, and all of those things. So yeah, I hope that helps.
Yeah. So I was just Googling the total number of Robinhood users, and yeah, this is crazy. They have almost 23 million users.
Yes.
So that's, how many users does DeFi have in total? Like I think I've seen
1, 2, 3 max.
I've seen some estimates, but it's like between like 3 and 5 million.
No, but those are wallets. Those are wallets, not real users.
Yeah. So
I
let's
have
say
5. I'm sure you and I have like 5 or 10.
Yeah. So that's crazy. So it's like 5 times the entire DeFi ecosystem in this one fintech. So yeah, we mentioned Robinhood with 23 million. You talked about Nubank with 50 million. It's huge. So to you, and it looks like, it's been Polygon's strategy, which you've done really successfully so far. It's been, the way to bring crypto to the masses is through these partnerships with these just, giants who have the ability to onboard millions of users at once, rather than build more, DeFi native apps that attract users. It's, just like going to these players that already have these like tens of millions of users already.
Yes, that's the goal, because if we make something cool on chain, and if we are the only people, and like 10 wallets with 100 million net TVL move capital there, like that's not how you change. And this is one thing which philosophy which I had, like when I read Compound and Aave white paper, like after DeFi summer, was like this DeFi thing. It blew my mind. Was like one thing which I read was like DeFi. Our goal with Polygon, like my goal with Polygon DeFi, is to make DeFi to make finance more accessible than running water. Like that is the goal in 10 years. If you are able to achieve something like that, then we are good. Otherwise, we are just like building one new DEX, one new yield farm, 10,000% APY. That's not how you change. You empower the big masses of the world.
Yeah, no, I love that vision, making finance more accessible or more common than running water. And to understand how Robinhood, like how this non-custodial wallet will work with Robinhood and in actually, onboarding these users to DeFi, because so far, like a lot of these like fintech announcements have been like fintech announcements with crypto have been these like walled gardens, right? And this used to be Robinhood so far. Like, okay, like Robinhood users trade crypto, but they only trade it within the Robinhood wallet, and then they cash out to their bank. And it's not really DeFi or crypto.
That's not DeFi. That's not
right.
That's not DeFi. That's like Celsius or Voyager, or like that's not DeFi.
Yeah, I think that's the same thing that like I think Cash App does, or I'm not sure, but like a lot of like fintechs that have announced similar, crypto offerings do that. It's just like, okay, you trade crypto within our system, and then you cash out to your bank.
No.
And that's it.
This is properly like, so they are using, I can dig into details. So Robinhood will be using 0x protocol, which is like Matcha, 0x, all those things, for, driving trades to all the DEXs that are on Polygon. So that is the goal. For 0x, V and Robinhood non-custodial wallet. So this will be a separate app. Just to be clear, this will not be that Robinhood wallet. the Robinhood app, which already has that, but this will be a separate wallet, which is a non-custodial wallet. So think of it exactly like MetaMask. Think of it like Robinhood's MetaMask. It's as simple as that. But all the trades will be via 0x on Polygon. So whoever is sending more trades via 0x, whoever is spreading, whoever is giving the best bid and spread, lowest spread on 0x will get the most volumes. As simple as that.
So interesting. So Robinhood is effectively like going to be competing with MetaMask.
Yes. And this is a mobile. I'll show you again.
And this is alpha right here because, like you said, there's only 10,000.
No one. I don't know. They will shout at me, I think. But should I show this?
Yeah, show it.
Okay.
I'm sure that they'll be happy to get more exposure.
Yeah, I can't send this. Like that's the only thing I can't. I showed it to a couple of people. So yeah. So this is the Aave. Let's say Aave is here. I want to, buy or sell or whatever, and max, like I have only 10 cents, and I buy here.
So guys, for those of you who are listening and not watching, you should then head to our YouTube video for the interview to take a peek at the new Robinhood and non-custodial wallet. What's the on-ramp like? Because I think that's the place where a lot of newbies to DeFi and crypto get lost. Like what's funding the wallet like? Like is it using Apple Pay or?
You see, you're swapping BUSD for USDC. And if I do it, I think it's done. It's done. So I sold some BUSD. Yeah. So there was BUSD before. Now it's all USDC.
And no confirmations, no gas.
No. So they use gasless transactions on the backend that allow like via Biconomy and these things. So basically Biconomy and they fund the transaction because gas is like very cheap on Polygon POS. So yeah.
Okay, so big change is they've abstracted away all the like cumbersome confirmations and like gas approvals and
gas approvals and one more thing, and still they're testing. Like this has just launched like 2-3 weeks ago, but this still like I keep seeing like test flight. If you use test flight, you'll keep seeing messages come up. They're testing this, they're testing that. So every day I get some mail saying Robinhood testing this. So they're improving the experience. But the more interesting thing is the onboarding part. So in onboarding, I did not have to save seed phrase somewhere. So that's what they're it's completely non-custodial, but they're working on ways to which I have to be honest, I have not looked too much into. Is they're trying ways to completely abstract away the seed phrase, saving and all of that. You can sign in via Google and all those things. So yeah.
I wonder how they're doing it with the seed phrase, because like you'll have to make it like the seed phrase accessible and recoverable at some point, right? Like, I wonder if it's like recovered via a password or...
Yeah, recovered, I think it will be via password or your Google ID or things like that. Because even I haven't dug too much into... Like I've used it a couple of times. The UX and all is good. You can see the address, everything upstairs on top. But yeah, I still haven't, to be honest, completely dug into it.
So interesting. I think it's really bullish for DeFi that all these, like some of the biggest brains out there in UX are trying to figure out how to make.
Yeah, it took me only like 15 seconds to get into the wallet, and you can back it up, back my free seed phrase into the cloud and encrypt it via Face ID and stuff like that is there. So that's why it took me like 10-15 seconds to first time I set up the wallet.
And then to fund it, did you have to make a bank transfer?
No, so you can. So right now I think they only show transfer from Robinhood, which is their big app.
Okay.
Big app. So you can move funds from there to here. But I don't know how they're planning to. But yeah, I'm sure they'll be integrating some fiat on ramp to go from credit to from bank to on-chain. That's not a problem.
Because that would be a limitation if you have to be a Robinhood user to use a non-custodial app. That would limit wallets to like only US.
Yeah,
users,
for sure. No,
so.
but they will be doing KYC. They will be doing onboarding. I know. I hope they will be doing. Yeah, but I'm pretty sure they are.
Zengo is a non-custodial wallet that aims to solve private key vulnerabilities. They do this by using a type of cryptography called MPC. That's a technology that's been used by billion-dollar institutions. Zengo Wallet is fully recoverable and uses 3-factor authentication, including 3D biometrics, so no one can access your wallet but you. They also have 24/7 support with real people directly on their app. Keep your crypto and NFTs safe with tech the big institutions have used for years. Download the Zengo app from the App Store or Google Play, that's Zengo, and use code Defiant to get $20 back on your first purchase of $200 or more. Go to their site for details and terms and conditions. In the final part of our conversation, Hamzah shares further insights into the DeFi ecosystem in Polygon. Where does most of the activity happen, and what type of innovation is he seeing?
Yeah, I think in terms of like the where the users are coming from, there's a lot of like various like different variety of users that use. So like I said, like just 2 weeks ago, not 2 weeks, just last week, I think, Polygon surpassed BSC in terms of 24-hour trading volume. For a couple of days, it was there. So Polygon had more users in terms more trading volume on these Uniswap, Balancer, all these big exchanges, QuickSwap on the top ones. But the more interesting thing which I see for Polygon DeFi is that, and some of these reports will be coming out via third party people who have compiled like Q3 overview. Q3, right? Q3 overview is that God knows which year we are going, where we are going. Like can't even think of sometimes. But yeah, this one thing which I'm more interested is that we stopped LM, we stopped liquidity mining. I mean, we started the whole ecosystem liquidity mining thing. Like we invented the whole playbook basically with Aave first time when we did that in 2021, like last year in April. And the whole DeFi for all liquidity mining thing to onboard users like Aave, Sushi, Curve, Balancer, all these things that we did last year. That kind of incentive, there are other chains doing it till today. But like I don't want to name anyone, like you can see it themselves, but even today, the more number of users, if you look at number of users being onboarded every day, like Polygon would be at first, if not at second, if not first would be BSC because of Binance. So that's a different thing. But that is more interesting to me. So that's how, like, different wallets, like Robinhood is just not even launched yet, but there are so many new wallets that are there, like KuCoin wallet. I was just looking at some numbers. They have very good numbers. Huobi wallet, Trust wallet. These guys have so many new retail users that want assets on QuickSwap, Aave. There are so many new projects like MeshSwap launched on Polygon from Clayton, and they're very big in Korea, Clayton chain, and they came from there and they brought in like I was checking the numbers, like about 50,000 unique users from Clayton chain or from Korea via their ecosystem. So that's kind of thing which is interesting. But in terms of innovation, there are a lot. So one thing which I'm very bullish on the future of DeFi, and many people will not like it, or in public also people don't like on Twitter, is that this RWA and uncollateralized and under-collateralized lending. As much as crypto wants to be purist crypto wants to be purist and everything like that, but and you will appreciate this if I hope, and please correct me if I'm wrong, is that in emerging economies like India, from where I am, or LATAM, which is the huge crypto market, I think the single largest crypto market, DeFi, at least DeFi, it's by far the single most largest. People have income, but people don't have assets. That is one very common thing which like at least in India, I've seen, and I'm sure like in emerging economies, like people like live paycheck to paycheck, and not even paycheck. Like we don't call paycheck is a more US term, but in there is like, every hour you get something, hourly wages, and if you can access, credit, you like that's how China did with Alipay and all these things. Like by embedding a credit ecosystem to every person. Not the way China did it, not the way people other did it, but more in a zero knowledge based, where you can, like how Superfluid is trying to do. I think I really like what Superfluid is trying to do is that, you stream money and you can get a line of credit down the line based on how good your stream of income has been. And that kind of technology will, open up so many new primitives that we can't even think of, like, peer-to-peer credit, circular lending, all these kind of things on one chain. And there are a lot of projects like Teller is doing this, TELLER.finance. They were able to pay for the mortgage for a house that was minted on chain. Like this was by Roofs, if I'm not mistaken, the name was Roofstock. And they are, I think, US's top 3 biggest single family houses broker, and they have like 10 billion, 5 to 10 billion of real estate book, and they minted the house on chain, and Teller was able to pay the mortgage via Polygon, pay the mortgage out. So, it's completely legal here in North Carolina, I think. Maybe I'm wrong. North Carolina, Colorado. So they were able to do that. That kind of stuff is what is more interesting. Then, there was someone who added his Airbnb property as collateral and took out a loan on that, under collateralized loan on that. That kind of stuff is cool. Like not doing. Firstly, getting out of the over collateralized lending market, which was very important to begin with, but not now. Now that we are seeing a high inflation rate environment, and DeFi credit has gone down, DeFi leverage has gone down, so interest rates on those things are down. And so if you add more risk, certainly these things are more risky, but you get higher yield in some of these things. So like it's definitely interesting, and these things RWA, and there are a lot of projects that, like, if you want, I can get into deeper. But that is one thing which I'm particularly very interested in.
Yeah, for sure. I'm super interested in how these under collateralized loans develop in DeFi. I agree with you that that's a way to just get a wider set of users to be able to use the space, because if you require collateral to do anything in DeFi, you're limiting the number of users to those who already have capital, right? So yeah, I agree, but it's also true that you are bringing in external risk. You're bringing in real world assets. You're bringing in points of censorship and centralization into DeFi. And yeah, a lot of people, look at kind of 2008 era and they're like, like these kind of uncollateralized loans and kind of derivatives of things, and that's how we got into this huge mess. So I see the point of like skeptics.
Yeah.
But I think for DeFi to grow, it's pretty. It's kind of the way to go. I don't know.
Yeah, I agree. Like I understand the skepticism for sure. Like the underwriting process becomes opaque sometimes. But one thing which I'm interested in, like via zero knowledge, that you can prove everything. Like you do not have to trust the solvency of an exchange. I'm just giving an example. You don't have to trust the solvency of an exchange by their word, but if they put a proof on chain of their balance sheet and the reserves or whatever, if they put a proof and that proof matches, then only you work with them or whatever it is, like that kind of thing is, and then you can plug that into their credit score. And that's what everyone lied about in 2008. Like, the subprime mortgages, everyone lied about the credit part, which again, like my maybe naive thought process of this, but if we have to, some naivety is important to push large scale adoption. So yeah, that I understand where the skepticism is, but yeah.
But maybe we have better technology now to make the process a bit more transparent and trustless. Okay, so and these are all kind of different projects that are happening on Polygon. I saw the Airbnb property that was super interesting, and I think we covered their rooftop sale as well. So yeah, like super interesting stuff. So it's been kind of it looks like your philosophy with moving Polygon forward is pretty kind of pragmatic, right? It's like, okay, on one hand, you have these kind of big companies that you want to partner and onboard, like Robinhood, like Reddit, and kind of go where the users are instead of like hoping that they will come to DeFi. And then on the other hand, you have also this kind of more pragmatic approach to DeFi, kind of less purist approach of, we need to get real world assets. We need to get unsecured and collateralized lending to be a bigger part of this space as well. Yeah,
this I've tried hard to, since like I joined when there was no DeFi on Polygon, there was only QuickSwap. And since then I've tried very hard to not get my biases in, because that's not the right way, and it's not justice. It does not do justice to the work everyone else is putting in the Polygon or wider ecosystem. And at this point where Polygon is, I feel that we we have to keep our biases aside and go where the market is, as well as have some biases is important. Of course, you have to have a certain conviction on certain things and not just go with the flow everywhere. And that's why we have divided the team into certain things where people who are more pragmatic do that, but the high net stuff where more degen and more interesting things are required, there are separate people who do that. So that it's just two different people, and then it's on me to figure out how at least on the DeFi side, to figure out like what to be prioritized and stuff like that.
And so to get to this goal that you mentioned of having finance be more accessible than running water, what do you think is missing? Like, what would you like to see built on Polygon or elsewhere?
I think one more important, credit for sure. Like credit by far is the most important, is the driver of finance in the real world. Like no one there is no over collateralized loans. There is nothing called over collateralized loans. Loans are under collateralized or uncollateralized, like credit cards and all of that. But credit, I think, will take time, particularly because there are a lot of moving parts. There are projects that are doing on-chain credit, which I think is very cool. Like how Gearbox did this. They have these credit accounts. Then there is Spectral Finance, which is doing some really cool stuff, and they're trying to they added Polygon. They're trying to aggregate a lot of data points on how your health factor, liquidation engine, all of those things are not liquidation engine, how your health factor, the quality of protocols you've interacted with, how many rug pulls have you been through. So all those kind of things they are putting into ML model, trying to give you a credit score on that. Doing on-chain stuff is easy, but when you do, I know a couple of projects that are integrating on Polygon now. They're trying to do like Chainlink for credit kind of a thing, So they're trying to bring off-chain credit via these big third parties that actually sell these data to credit cards for their monetization. So they're working with those third parties to bring their data on chain, that so they can append that data with on-chain data to provide a more holistic credit, because on-chain data you can Sybil, like you can easily Sybil attack, you can create multiple things, and but if you add your off-chain data on chain, then it becomes less sibillable, so to say. So that kind of stuff I'm very interested in, this credit RWA. And one more thing which RWA on that is in this environment, in this high inflation environment, right? Like tokenization will become very, very, very important, and tokenization of real world assets, whether it is bills, bonds, mortgages, XYZ, anything that gives you a high yield, because in this high rate environment, which is going up, and as per macro experts, it is continue, if not at this level, it will continue to be in the next couple of years, if not at the same acceleration. But in DeFi, because of all the credit, like, the big guys who gave credit, all of them are, down bad. So the interest rates on Aave is going down, or Aave compound is going down, whereas everything else in real world is going up. So how do you, I don't know what to call it, but like bridge the gap is by bringing these off-chain assets on-chain, tokenizing them and giving yield on that and giving loans on top of that. And that is, I think, is very cool. And Polygon, there's a lot of bunch happening on Polygon. There is one market that is doing solar, that is solely focused on solar, and they're based out of SF. They are giving loans to teams in farms, solar farms in Africa, India, and funding them. They already have like 7 or 8 big farms that are running by their capital, and they're doing all the underwriting and all of that. So that kind of stuff is cool because it gives you yield, real world, uncorrelated yield. And yeah, that kind of stuff I think is very cool.
So interesting. I love that. I don't know. It looks like we are finally seeing more innovation happening in DeFi. Like there was I don't know if you agree, but there was a period of time last year where, to me, the space seemed a little bit stagnant. Like it was just like same things, kind of cycling over and over, just like people forking and copying each other.
I remember you were saying this on one of your podcasts. Like multiple times you've said that. Like last year was I've been kind of missing this innovation, and I knew that I've also said this before. I knew that it would happen on the bear market, that we would start to see kind of this just like new applications pick up. So tokenized solar farms on Polygon, getting real yield to people. That's super interesting. And these kind of like chain link for credit scores also sounds promising. And I agree, like for this kind of mainstream user to come, I think credit and like credit scores that just like comes one in hand with the other will be key. So good to see some development on that front for sure. Okay, and then to start wrapping up, what do you think well, first off, like just like looking at the Polygon roadmap, I know we've discussed like some of the biggest announcements, but what other developments should we expect from Polygon and then the kind of next couple of months? Like what does the roadmap look like? Yeah, I think people have started to think that Polygon has the best BD in the space. But in the coming months, in the coming quarter 1, quarter 2, people will realize that Polygon has the best tech. This has one of the best tech thing in the space. That is for sure. Because of zk-EVM, because of the prover, because of Supernet, and all these things will become one with data availability, will become one big modular Ethereum scaling solution that anyone can come and build for that. That will become that will become more evident, so to say. Like right now, BD has been we have been very aggressive and will be, that's for sure, will be aggressive on the BD side. But this tech will become more mature now that there is less, which you just said like about there was so much hype around forking and all, because now Twitter influencers are gone. Like the guys who used to tweet up in bull, like those guys are gone. You know who is building, you see the numbers, they are less fabricated numbers. So now people are seeing, in terms of like what new announcement and stuff is coming, there's a lot of like institutional DeFi coming, which like RWA, institutional DeFi, a lot of stuff is coming in the next I think either the news is going today, tomorrow, this week, sometime. So a lot of stuff is ready on the PR, which is going to happen, which will onboard a lot of users on chain and have more interesting risk management use cases. So I'm pretty excited about that.
Interesting. So should we expect something like Nubank, but with like another sort of like financial institution?
Yeah. More retail focus. I mean, Nubank is also pretty retail, but we are like in LATAM, the Polygon will become the biggest. It's already like with Nubank thing. Ripio is already on Polygon. I don't know if you know, but Ripio. Ripio is like Argentina. Mm-hmm. is very big in Argentina, and they have already announced. And this was like July or something. They already announced June or July that they will be building a supernet for some of their clients. You know, some of those clients, some big ones that run that do a bunch of stuff. So like crypto in LATAM is like also very important for me. So like some big names, yes, you'll see come up in that space as well.
Awesome. Super interesting. Okay. And then just like bigger picture, what does Polygon look like, or what would you like to see Polygon look like? Just let's say like a year from now. Like how big is it? What kind of users does it have? Yeah, like what's kind of the long-term goal?
That's interesting. Like in terms of users, like I don't want to like put a number on that because of God knows what this macro market is going to look like. However, stuff like Reddit keeps coming, so who knows? 3 million new addresses via Reddit. I don't know, 50 million via Nubank. With Robinhood, I don't know, like probably 10 million or 5 million new users, new wallets get created. So I don't know, like probably like 200, 300 million. I don't want to put a number, to be honest. There, what I'm more interested is following is being the first choice for builders to be. Where you want to build, we will build Polygon. Where do you want to build your fintech? Polygon. Where do you want to build your NFT collection? Polygon. That should be the goal. It is the goal and will continue to be like the North Star for everything that we do, whether it is tech, BD, PR, marketing, whatever it is, will always be that, because these dApps are the future and not the chains. Like, chain will continue to be, will continue to be the settlement layer, of course. But these dApps like Lens, for example, like Lens is a very good flagship product that represents Polygon. Because this has so much users, it is a clear use case that the Web3 industry needs. So what I would say is that I would say like 10 more Lens, 10, 15 more projects like Lens. Not in the same category. I wish the best for Lens. I keep hanging around their office in New York. But what I mean is like more projects that are like 10, 15, 20 projects that the best in class in their vertical, or at least 2 of each vertical that try to, be the best. And Polygon is the tech empowering that vertical, that each vertical. And that's the goal. That's the goal. Whether it is NFT, gaming, PFPs, DeFi, fintech, institution, tokenization, enterprise, whatever it is, and that's how you onboard the next 100 million users on chain.
Mm-hmm. Okay, so being the main hub for builders, that's kind of the North Star going forward. Awesome. Okay, and then a final question, Hamzah. I'd love to hear what makes you Defiant.
What makes Polygon defiant?
No, what makes you?
What makes me? That's a good question. I mean, see, I've grown up in India, in like a lower middle class family. People, yeah, like there were not many assets, so to say. Like that's why, like, when I said the income is very important more than assets, and I've seen firsthand how internet changed, like how Facebook when it started, Facebook changed India and like many other emerging economies because of access to information, access to media, access to English, more importantly, because everything was in English, more of the videos were in English, Instagram, all of these things, YouTube, mainly YouTube, like how it changed because media and information was public. And that firsthand, I've seen a lot of like lives and like families and these being changed. And I think we are in this same position now, and it is our responsibility. Like what Eric Voorhees was saying on the SBF Bankless podcast was also very, very philosophical debate that, email is not regulated, email is not KYC, and so should not be basic lending, borrowing, basic access to capital. And that is what is, I think, keeps me defiant is that, and resistant to anything is that, this DeFi should become, these things that we are in this together, this should become more accessible.
I love it. Yeah, I totally agree with that vision. Hamzah, it's been a pleasure having you on the podcast. Thanks again for coming on, and learned a ton about Polygon, and super excited about what's to come. So thanks again.
No, thank you for having me. This was like really fun.